Steve, it's been more than a decade since storms like Harvey and Irma have hit the US. They're also going to be really testing events for the capital markets when we think about resilience. What have been your observations here?
Well, I think that generally what we have seen is that there are a number of particularly cat bonds at risk. I mean, we do recognise that those are the most public face of the ILS market. And as a result, this allows us the opportunity to really understand how different kinds of very public exposures are likely to be impacted by events like Irma. Yeah. And what we are seeing is that there are a number which I would say are at significant risk of being affected. It's still early days in the development of this event, and so it will be interesting to see later on today, once we get a little bit more insight as to how Irma has passed over Florida, where it's impacted, which will give us a much more clarity.
If the losses associated to Irma are reaching the kind of figures that they are, will this make fundraising efforts harder?
I actually don't think it's going to change the appetite for this kind of investment opportunity from an investor standpoint. We have actually already seen a number of the larger specialist ILS firms being out there in the market, starting to lay the groundwork of additional capital raising should it be required. And so we've always heard from the market that for every dollar in this space, there are multiples of the number of dollars out there waiting to get in, as and when both product materializes and when rates recover somewhat. Yes. I can only see this the outcomes from Hurricane Irma and any losses that result being a positive thing for money coming into the space. Yeah. Obviously, there are significant perils that go along with hurricanes, but from an investment opportunity standpoint, I certainly don't see investors shying away from this and from continuing to provide support for the insurance-linked market.
Looking at the modelling aspect of this, how does this impact your models for capital markets in this space?
Well, actually, we've seen our models perform exceedingly well in the run-up to this event, and as the hurricane is playing out, we've actually seen the performance of the models be within the areas of uncertainty that we would ordinarily expect. I've had a very good conversation with our model development team and our cat responders this morning, and there certainly is no concerns about how the models have worked, about how they have represented those events. Some of the specifics of Irma in particular are a little bit strange in terms of she's likely to impact both sides of the peninsula, and we've seen the models include those kind of events and include those kind of scenarios in our probabilistic assessments. As such, I certainly wouldn't expect there to be any significant kind of changes to the model, and we're pretty confident in how they've performed. And also, while it's worth noting that there have been two significant events striking US mainland in relatively quick succession, this is not a out of the ordinary season as such in terms of the broader Atlantic basin. We've only seen 3 major hurricanes up to this point in the broader Atlantic basin, and so until the numbers get well above 6, that's only when we start getting to the realms of the models not necessarily representing what we're seeing in the real world.